Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. And in this episode, we're really going to look more about your trading profile and less really about stocks. So we're going to take a look at looking at yourself and finding a match, okay? Because when you look at any profile, anything that you do in the market, it all comes down to finding your match and what's working for you, because you are not the same like everybody else. As much as you want to believe it, you know, if you're looking at day trading and this is what you're attracted to, you're probably a different day trader. Or if you're looking at penny stocks, you're probably a different type of penny stock trader. And if you're a swing trader or a long-term investor, again, you're probably a long-term investor that's different from another person. So it's important to really find your match. And similar to how you choose a vehicle, similar to how you choose a relationship, everybody's different. Your preference is different than another person's. And it's in the end, your goal to find that perfect match, to figure it out in what's going to work for you and your trading style, your risk management, your education level, on what things you're attracted to, and create a system, create a style and strategy that works for you. So that's what we'll be talking about in this lesson. Is we'll do an example about cars. We'll take a look at doing an example about your risk tolerance. I'll also give you some breakdowns about profiles for trading profiles that you could use to kind of create your own trading profile. Now, it's not going to be specific to any one individual because obviously you are different than somebody else, but it's going to give you some things to think about creating your trading profile that works for you, looking at your risk tolerance, looking at your education level, the style, and combining those things along with managing your risk and making it together and creating a profile that's yours. So ultimately, to be successful in figuring out your trading profile, you need to look in the mirror and be honest with yourself. As I always typically mention, if you're the type of person that's always late, but you believe to be on time, you got to be honest with yourself and say, no, I'm the type of person that's always late. If you're the type of person that by chance is zipping through traffic and through cars in and out and blasting through red lights, then again, you need to be honest with yourself about those things. And you're doing some really crazy and dangerous things. And you might say, oh no, it's not dangerous. But looking in the mirror, being honest with yourself, that's really important, especially in trading, because it's going to show, it's going to reflect in your trading account. You're going to see the losses. So if you're not honest with yourself when it comes to trading, you're going to see the result just like that. You're going to see it right in your account as you're making trades, because it's going to be a reflection of how honest you are with yourself. So that's what we're going to do in this week's lesson, is just hone in and focus on your personal trading profile, because your profile is going to be different than anyone else's. So let's get started and let's get into the lesson. All right, so before we take a look at this on trading and how it relates to trading, let's take a look at something more realistic that I think most people can relate to or apply these concepts to. So if we take a look at this screen right here, and what I really have right now is just 3 different types of vehicles. I tried to get them to be all white and all Toyotas, but that just didn't pan out. So in either case, what we have here is we have a hybrid vehicle, we have a convertible, and we have a truck. If you were to choose one of these vehicles, which one would you choose? Okay, so you're out there, you're looking for a car, you're shopping for a vehicle, and you're looking to buy one of these vehicles. Which one are you going to choose? Some people would probably choose the hybrid. Other people might choose the convertible, and some people would choose the truck. The hybrid is really good on gas mileage. So if you're taking a trip, sometimes if you're looking to save money on gas, the hybrid right here would be the way to go. If you want a little bit more fun and adventure, you might decide to go with the convertible. And for other people, you might decide to get a truck because it might be a little bit better for hauling lumber, hauling wood, picking up other things and at the hardware store for just transportation when you have a large or bigger load. So everybody's different when they're looking at purchasing a vehicle. Now, as you get into this, and let's just say we're now taking a look at things of just the trucks. So now when you look at this spread of trucks, if that's what you're interested in, now you have a Nissan truck, you have a Dodge truck, you have a Ford truck, you have a Chevy truck, a Toyota truck. There's all kinds of trucks that you could choose from. So you're starting to narrow things down, okay? So we started from a base concept, which we did a convertible, a hybrid, and a truck. course, we could have went with a sedan, a bicycle, a moped, a motorcycle. There's a lot of different transportation things out there. But now, as you continue to narrow things down, let's say now you're going into a truck, and now you have this choice that you could choose from. And again, you're starting to narrow things down, but which one do you choose? Even if you're interested in a truck, there's still a lot of choices out there. So looking at this, I mean, you have 1, 2, 3, 4, 5 different choices. And even from there, you have modifications that you could go with, such as leather, sunroof, this and that. There's a lot of different modifications that you could go with. So again, you continue to narrow these things down. So for everybody, it's going to be much different on what they choose because of their preference, because of their goals, because of their personal situations, because of their desires. It's all going to be different. So it's important for you to find your match. What's working for you? What's going to work for your needs? So as we go into trading and we start looking at your risk tolerance, as you have different age groups and ages within you, you might have a very young person, middle-aged person, and an older person. And from here, what might happen is that when you're younger, or when you're really young, you're not even worried or concerned about investing. Or if you are, then your risk tolerance could be much higher. As you get to be a little bit more middle-aged, then now you're a little more conservative. You're not as conservative as maybe somebody who's a lot older, but you're a little more conservative. You're a little more cautious because now you have your solid foundation, you have your lifestyle, and so forth. As you become a little bit older, let's say you're in your retirement age, you might be extremely conservative or risk averse as you become a grandparent or as you just in your retirement stage, because now you don't have the years or the time to make up any losses or for growth in income. You're looking for more stability. So looking at your age bracket, things are going to change. Things are going to change depending on your risk tolerance. Now, I can't categorize that everybody who's young is going to be aggressive. It doesn't work that way. It doesn't work that everybody who's old is also conservative, or everybody who's in retirement stage is conservative. Usually it doesn't work out that way. In theory, the majority, it does work out that way. But in general, you're really looking in the mirror to see, well, what type of risk tolerance can you handle? Because someone who's even young or middle-aged might be trading or investing or might be extremely conservative because they don't like the risk. That is just their natural character. That is just their natural personality. So it's ultimately very important for you to analyze and evaluate your personal risk. So knowing and understanding your risk and your risk tolerance, that's ultimately the key. So are you low risk? Are you, let's say, medium or average risk? Or are you a person who likes to take the high risk? So if this is you, which one are you? Are you the low risk person? Are you the medium risk person? Or are you the high risk person? Ultimately, you're trying to find something that's a match for you, because that's the end key. You're trying to figure out where you are in terms of your risk level. And then what you're trying to do is also match up your trading style. So if you have this right here, this is based on the risk. But now, as you start to look at things a little bit further, you're also going to look not just at the risk, but if you go on this side is also your style, the type of thing that works for you. So for example, in here, you might be, and we'll keep it simple, let's just say a day trader. You could be a swing trader. Let's just say a long-term investor, or it might be even an options trader. Okay, so let's just say this is your style. If you want to throw other things in here, you could say Forex and so on. So as you start getting into this, again, which one is right for you? So this is just the style or the type of investments that you're going to do. So are you a person with low risk and that wants long-term investing, or are you a low risk but really like the fact of day trading? Or are you more of a high risk who wants to day trade, or a high risk who wants to trade options, or a high risk who wants to swing trade? So you're trying to find your match. Ultimately, that's the goal. And even within these levels or these levels, you have little sub levels, right? So you can't really define it too specific. It's not like a number of 1 to 100 where you could find, let's say the pounds of pressure for a tire. It's not something that you can define your risk at those levels. Now, insurance companies, they do attempt to do this to go ahead and insure you. They try to assign you a number or a risk value. But in general, for trading purposes, you're going to be at different risk levels, and this will change within your life. But there's little sub-stages within here. So just take a spectrum and see where is it that you fall into place from low to high risk. In the same thing as you get into the style, as you get into day trading, swing trading, long-term investing, there's going to be different levels, and the same thing with options. You'll have different levels within those stages. So what you can do here is now take a look at, let's just say you're a day trader, okay? As you're a day trader, depending on your risk level, now are you a person who's into, let's say, trading penny stocks on the day trading? Okay, so are you trading penny stocks? Or are you a day trader who's interested in trading blue chip companies or bigger companies or more stable companies? Or maybe are you a day trader who likes to trade maybe new companies or IPO based companies, So again, you have different styles within a major style. So it's really about narrowing things down and finding a match that works for you. Because what's going to happen, and the issue that happens with many people, is they're in the wrong vehicle. They're doing the wrong thing. So as we look into this in terms of the vehicles taking each vehicle as the stock or the style or the type of trading that you should be doing, for many people, let's just say they should be in a hybrid. But maybe a hybrid is not cool enough. Maybe the social factor behind it just stinks, or you're not interested in a hybrid simply because it's not cool amongst your friends or your peers or the people you associate with. In that case, you say, well, I want a convertible. Or the same thing could be with an SUV or a van. Let's just say you're a parent. There's no way you're going to catch me inside a van, even though the van is the right vehicle for you, whereas many people opt out of the van and they say, no, I need to drive an SUV. It's more fashionable, it's better looking, whatever your story is, doesn't matter. That's just basically social triggering that's playing an effect on you, and it's not the right match for you. What makes the most sense for you? That's what you need to do, is look in the mirror and look at trading as a business at what's right for you. Because in the end, if you're driving the wrong vehicle, there's some caveats to that, right? So let's just say you're choosing between a hybrid and a truck, and a hybrid is just not cool enough. You want to go with a truck, but now it's more expensive. It's more expensive to fuel up. It's more expensive to potentially fix. Again, there's other issues that go along with it. It's more difficult to park, more difficult to drive it because it's a larger vehicle, whatever those issues are. Same thing goes with a van versus an SUV. If you're looking at being a parent, you want to seat more people. A van can seat more people, but an SUV just looks cooler. It appears cooler. Even though the engine might be the same, people opt to go with the SUV. And even though the performance might be just slightly different, the cost of the SUV might be that much more, simply because you're paying for that prestige. So again, you're getting in the wrong vehicle based on the requirements that you need. You're doing it based on social factors. And this is how people trade as they look into getting into trades. I have seen people get into trading penny stocks simply because of an email. Okay, so because they've heard of an email, because they've heard of something that comes into the email, they think this is the stock they should get into. I've seen people trade different blue chip stocks because they've seen things on TV. Not because that's what they should be trading, but because this is what people on TV are talking about, or vice versa with the IPOs, the same thing. Whether that's on TV, whether that's on the news, whether that's an article, this is what happens. People get into these things even though they shouldn't be trading these. Okay, if you're the person that should be trading blue chip stocks and blue chip companies, then that's what you need to focus on. That's your core. And if you're not a day trader, if you're more of a swing trader, you have a calmer personality, or you have a slower investment tolerance, then you might want to stick to swing trading the blue chip stocks, right? So you need to find that match of what works for you. So let's potentially take a look at creating a trading profile for yourself. Okay, so if we look at a trading profile, I'm just using a few different things regarding risk level, let's say a style, a comfort area, education, and managing those trades or investments. So if you look at this, you'll slowly start coming up with your trading profile, but it's important for you to be really honest with yourself about yourself when you're looking at this, because if you're the type of person that's constantly late to dinner and you're telling yourself, well, I'm always on time, well, you're not going to get a proper trading profile because you won't be honest with yourself as well. It's really important you're able to see yourself in a real way, seeing yourself in the mirror, seeing yourself from an outer perspective. So the first key question is knowing and understanding your risk level. Okay, so if you look at it on a spectrum, okay, all the way from little to no risk, all the way to high risk, where do you fall into play? In general, as I mentioned earlier, if you're a little bit older, you'll probably fall into the no risk or very limited risk area. Okay, if you're a little bit younger, you might fall into over here. So this is younger, this would be older. Probably will be something like that. Let's say mid-years will be somewhere over here. But typically, the younger you are, the higher the risk you'll be able to take on, or the more that you can take on, simply because you have time to make up that difference. Here comes down to kind of a little bit personal preference. Style. What is it that you typically want to trade like? The style, similar to the style of clothing that you wear, right? You have different styles. So you might have a day trader, you might have a swing trader, you might be more of a long-term investor. It could be an options related style. Now within these, it breaks things apart, right? So you could go deeper within your style. You could say, okay, I'm a day trader only for penny stocks. I'm a day trader only for big cap. I'm a swing trader for the top 5 leading companies like a Apple, a Google, a Netflix. So there's different breakdowns within this, but what is your style? What is it that you like to trade? Maybe if you're an options trader, you might only trade the indices. Okay, I only trade the SPX, for example, or the RUT. If that's your style, by all means, then you can define it, but you go deeper within your style. And what's your comfort area? So the types of stocks or ETFs or indices that you like to trade, is it the low dollar amount? Is it more the tech companies? Is it more, let's say, the bio companies, or is it more the cyclicals? Could it be more of, let's just say, the healthcare companies? What do you like to trade? Is it the high dollar companies? Is it the companies with good fundamentals? Are you looking more based on just technicals? Okay, so what is it that's your comfort area? And this typically relates to your education. Okay, in general, the more education that you have in a certain area, or the more that you've spent time within that area. So let's just say I've spent more time researching about day trading, low dollar stocks, I'll probably gravitate more to penny stocks. Okay, if you've simply watched more videos of people or followed people that are more of day traders or swing traders that trade penny stocks, that's typically your education. That's where it's going to be your comfort area. Okay, but where is it that you want to spend more education? So here the key thing is where do you want to progress? Because if you're still in the learning stage, if you're still in the growth stage, you need to define this and then eliminate those areas. Because now all of a sudden, if you can manifest and project where is it that you want to get to, let's just say you want to trade high dollar stocks, because that's where the big money is at, right? Bigger stocks just move a lot faster. If this is where you want to get to, you want to focus based on technicals, and you want to be a swing trader to a longer term investor, or potentially even just do options, okay, on these high dollar stocks, then obviously you need to focus more insights, energy, and education into option trading by the technicals in the high dollar stocks. Okay, so that's what you need to focus on, rather than wasting your time on something else like day trading the penny stocks or hanging out and following the people that are trading the penny stocks. Of course, if you're looking to trade the penny stocks If that's where you want to get to, then you need to spend more time focusing on the low dollar stocks. Okay, so you need to then focus on the cheaper stocks, probably more for day trading because penny stocks move for a shorter period of time. And in that case, that should be your focus in education. And finally, as we get into the next stage, you're looking at managing your trades. Everybody has a different management perspective or the way that they like to manage their account. Just like you're managing a bank account differently, right? Or your personal money. Okay, some people will spend their money on cameras. Other people will spend money on their computers. You might spend money on your car. Whatever your priority is, that's typically where people put their money. If you're more interested in camera gear and computer gear, you really don't care about cars. For me, that's typically the way things work out. I don't really care about my car that much because I don't really drive that much, but I'll spend more money on my computer and camera gear because I value those things a lot more. I use them day to day. So in either case, where is it that you spend more money, more energy, more resources? That's typically what you're looking at. So the same thing here in managing your trades. The management is going to be different based on your style, your comfort area, your education. In general, what I tell people is if you have, let's just say you're trading shares or contracts, 2 contracts of options or 100 shares, if you have a stock that goes up, let's just say a couple bucks, depending on the price of the stock, of course. If it's a $2 stock and it goes up $1, you want to take about half of your position off. And as you get more proficient, you could do, let's say, a third or a quarter off in the strength and then let the rest ride. If you're doing option contracts, the same thing. You could take 1 contract off into strength and then let the remaining option contract ride. So again, this all really just depends on you personally, but your management style might be different. Okay, you might be the person that on pullbacks right here, you buy the stock. Other people might be the person that buys on breakouts. You could be a combination of both. You could be much more flexible and do a combination on those things. But it ultimately comes down to your style of managing the trades because you might manage trades differently than somebody else. So building a profile around some of these things is ultimately your goal and key, is figuring out what's your risk level, okay? Figuring out what's your style. Figuring out your comfort area. What do you like to trade? What about your education? Are you more focused on penny stocks or do you want to get into more options? Then that's really where you need to focus on. And then managing. How do you manage your portfolio? Do you manage it by buying on the dips? Do you manage based on looking for extreme events, extreme drops, extreme volatility? Or are you managing it based on the money, the finances that you have on the table, selling half, a third, a quarter? So all those things come into play that create a personal, unique profile for you as a trader. All right, so just like choosing a woman, a mate, or someone to spend the rest of your life with, you have choices, you have options, right? You're looking for your match. You have somebody that's right here, you have one type of person, you got a different person. You got a third person, a fourth person. There's so many different types of people out there. And all you really need to do is just find one. You need to find one that works with you. And in trading, the same thing. You only need to find one style, one strategy, one main thing, the way that you trade that works with you personally, because you are unique. And that's why you have to find something that matches with you. Rather than trying one thing or another thing, you're going to do that. Just like in dating, you probably will date 1 or 2 or multiple people through time and through history just to figure out, number one, what is it that you're looking for, how you match with one person or another. But in general, in the end, you're looking for someone that can match and relate to you. And with trading, that's what you're doing. You're trying to find a match that you can relate with and that you can do time and time again, that you can take advantage of the market opportunities that are given, meaning you put on that trade every single month, or you put on a trade that you see every single week that matches your criteria. And that's what you're doing. You're finding your specialty. You're finding the specialty that works for you. Now, rather than when it comes to choosing a sport, choosing a vehicle, all those things are external, okay? Those are external things. Whereas when it comes to trading, a lot of it is internal. You have to look inward to really figure out what works for you personally. And you have to be honest with yourself. And that's ultimately one of the problems that many people have, is that they're not honest with themselves about what style they are, how much risk tolerance they have, or maybe they overinflate their education. We always want to think we're smarter than we are, when in fact, when we have very little education, that's ultimately where we need to be a little more careful, okay? So instead, take things a little bit slower. And when you find your match, then that's the breakthrough. That's ultimately where you can create a trade and do that trade and look at that trade and make it work on a consistent basis. So take a moment to look in the mirror and evaluate yourself, to figure out your risk profile. And it's something that may take a little bit of time through experimentation, to figuring out what it is that you like, what you don't like, what you can match with. Of course, some of these things you can mutate them, you can morph them, you can guide them into a certain way, depending on where you focus your energy, your education, and if you simply focus to improve. But if you look at your risk tolerance, okay, the amount of risk you want to put on, what are the things that you're attracted to, the style of trading that you're attracted to. If you take a look at the education that you currently have and the education that you also need to get to where it is that you want to get to, looking and evaluating all these things along with how you manage money or how you prefer to manage money is going to help you evaluate your personal trading profile, and then look at how you can modify your trading profile, because ultimately, you're looking to constantly evolve and improve. And if you're looking to do that, you need to really know and understand the types of risks that you want to put on the table, the types of trades that you like to do, the type of trades that you're most comfortable with doing, what are the trades that are most successful for you. So that's ultimately what you need to do, and figure those things out. And if you can do that, then you can consistently trade on a week-to-week, month-to-month, or a year-to-year basis, producing those same results, because you know and understand what works for you. So thanks for joining me for another video lesson. If you want to see more training videos like this one, or you just want to get notified as I release new content and educational material, then go ahead, click this button right here, and when you get there, enter your name and email address, and you'll be added to the newsletter list, where I'll share those insights and details as they are released. But if you want to continue learning with me through other free training and videos and just continue watching, then click the thumbnail right here, and you'll continue learning through YouTube and seeing more videos. In the end, remember, there's more to life than money. Go out, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.